to take us through some of the economic data that we've been seeing coming through from the Namibian front. Rowland, thank you so much for joining us today. I'll start off with the inflation data that we saw coming through for the month of May. 6% year-on-year growth in inflation, that down from 6.4%. For you, is this a signal of decreasing inflation? Are we going to continue seeing inflation coming down as it has for the past 4 months?
Yeah, well, obviously it's a signal of decreasing inflation. Whether it's going to continue or not is quite a difficult question. We've seen a number of factors pushing both up and down. So I think it's possible that it could go either way, but I think what's probably most likely is that we'll see a flattening off and then sort of fluctuations around this level, maybe tailing off down towards the 5-point-something% for the rest of the year. But it doesn't look likely that we're going to see continued significant falls in inflation. With the exchange rate weakening, it makes it quite unlikely that we're going to see huge decreases in inflation. Namibia is a net importer, so obviously that has a big impact. Also, I think that the fuel prices have come down, but they've not perhaps settled at the lowest levels that we've seen. They're starting to move up again a little bit. So this also has a big impact on inflation.
Of course, you talk about the inflationary threat as a result of a weakening currency, and that, of course, is an issue that the Reserve Bank of South Africa has also highlighted here in South Africa. So what are your views on the currency right now, the key levels that it could depreciate to, a kind of base case scenario that you're looking at?
It's quite hard to say, really. I think currency predictions are probably amongst the hardest things that we do. And if you look at the drivers of the current depreciation, it seems to be that people are a little bit risk averse at the moment, trying to move money from sort of softer currencies towards harder currencies. And I think that we've seen a bit of capital outflow as a result of that, people looking to invest in harder currency, US dollar and so on. However, it really depends a lot on what the reserve banks do. If South Africa cuts, then obviously it's less tempting to invest in South Africa. At the same time, as the other countries are cutting, South Africa hasn't yet cut. So I think that this also provides some incentive for inflows of funds. So it's extremely difficult to predict.
Yeah, as we always say here in South Africa, you know, the rand is one of the most volatile currencies, but any currency prediction right now, in light of all the uncertainty, is just impossible, near impossible. In terms of inflation, let's go back to inflation. Looking at food inflation sitting at 7.9% in May. We've also seen food inflation ticking down from indications globally as to where food inflation is going. What are your thoughts on that number? Are we going to continue seeing food depreciation coming through? Deflation, rather, of course.
Well, obviously, the cost of fuel has a big impact on this. Here, we generally see an almost immediate impact on the cost of fuel on inflation, say a 1 or 2 month lag. And then about 9 months later, we see second round effects coming through again on food. But more than that, I mean, we are a net importer of food, so we take global prices. And I think that what you can see, there's also a significant lag there, however, you know, up to 18 months sometimes. So it does take quite a long time for global food prices to come through to Namibia. But I think that what we are likely to see is quite a lot of volatility in food prices. I think last year we saw quite a lot of ups and downs, particularly in cereal prices, and that's one of the things that impacts us in a big way. We're a big importer of cereals, or not by global standards, but it's one of the major things that we do import. Meat is another factor that plays a big role in food inflation here, that we import to a much lesser degree. So we're less exposed to the rest of the world when it comes to that. And meat prices are currently coming down in Namibia. So I think, yeah, food inflation is probably, again, it's on a bit of a knife edge. Some factors pushing it up, some factors pushing it down.
But in the meantime, you're still looking at inflation as a stable rate and possibly moving once again below that 6% mark overall. When it comes to transport inflation, you mentioned, of course, fuel, so that would impact the overall transport inflation number. What kind of trends are you seeing on that front?
Yeah, transport inflation has been fairly steady, actually. And last month we saw a slight increase in transport inflation from 7.5 to 8%. So I think that that's quite unlikely to continue in the next couple of months, given the reduction in fuel prices. At the same time, the direct impact of fuel, the percent of the overall inflation basket that's made up by petrol and diesel, is only about 2%. Of course, this goes through to a number of other things, so for example, the cost of public transport and so on. So I think, yeah, stabilizing perhaps is not the right word, probably moving down a little bit in the next few months, but after that we'll be at the mercy of global fuel prices like everybody else.
Yeah. In terms of the resilience of the economy right now, because we're concerned about global growth globally, we saw some data once again coming through from China, which underscores a concern around that economy. The Federal Reserve policymakers yesterday indicating how fragile the US economy is. So there's a lot of bad data to look at, and concerns around local economies here in sub-Saharan Africa. How resilient do you think Namibia is right now?
Well, I think Namibia is probably better prepared for a bad economic downturn than a number of other countries, and certainly better than we were prepared for such a downturn in 2009 and 2008. But at the same time, I think we are an exporter of goods to Europe, which obviously is going to have a huge impact on our overall economy at the end of the day. Any luxury goods, should Europe continue to experience recession, I think we are likely to feel the impact of that.